Auto numbers have come through, and as you can see, it is largely in line with estimates. We have the revenue, which is up around 5.5% this quarter. The street was anticipating 12,584 odd crores, and that's exactly what they've reported this time. We do have the margins, which have come in at around 19.7% as well. So that's also largely in line with estimates. The overall profit came in at around 2,096 odd crores, again in line with estimates. So overall, it was a muted quarter, meeting muted expectations this time. We'll wait by for the details with regards to what they have reported in terms of the internals. But just another point to note is that the margins have slipped below 20%. So that would be an important point to watch out for. Realizations, how do they match up this time? In fact, to give us the entire lowdown on what Bajaj Auto has reported, we have Sudarshan joining in. Sudarshan, over to you.
So in this tough environment, it's not a bad result that Bajaj Auto has reported for Q1 FY26. Expectations were muted, but company has managed to meet the estimates. Two major highlights from the Q1 result is first, realization has come in higher than the expectation. Second, margin has slipped below 20% after several quarters. First, talking about the headline numbers, profit has increased by 5.4%. It has come around 2,100 crore. Revenue has increased by more than 5% against expectation of an increase of 2%. EBITDA too has seen a jump of around 3%, and margin has fallen to 19.7% versus 20.3%. But it has met our expectations. Even we were estimating that margin would come around 19.7%. Now, why revenue growth has just seen an increase of 5%? If you take a look at the volumes, both year-on-year and on a sequential basis, volumes had increased by just 1%. That's the reason we were not expecting a much increase in the revenue, and that's the reason just a 5% jump. While its recent price hike that company had taken has helped improve realization. That's the reason you are seeing realization has improved by 4% year-on-year and up 3% on a sequential basis. Also, margin has fallen by 50 basis points on a sequential basis, and company is saying that it's mainly on lower dollar realization that company has seen during the quarter, but improved mix and operating leverage have helped offset the impact of commodity inflation. Some of the major highlights that company has talked about is EVs now constitute more than 20% to domestic revenues versus early teens in the same quarter last year, and also quarterly export revenues are at the highest levels that company has ever seen. So overall, it's not a bad set of earnings that Bajaj Auto has reported for Q1 FY26. But as I've told earlier in the preview, more than the earnings for Q1 FY26, commentary that will what matter the most for two-wheelers ahead of festive season.
Okay, commentary ahead of the festive season will be most important. The other